a darling for FIs. I'm talking about the financials. What's interesting is that within Bank Nifty, there is one stock which has actually outperformed on a YTD basis, and we're talking about AU, Small Finance Bank. In fact, since listing, if you have to talk about their YTD performance, it's always been the best. Let's understand from Hersh as to what is it that is working for your AU Small Finance Bank, and how has strategy changed, if any? Hersh, over to you.
Well, yes. What's happening in AU Small Finance Bank? First off, let's try and understand why AU Small Finance Bank. It's been a strong outperformer financial year to date. It's given a 55% return in the last 3 months to investors, while the Bank Nifty has only given a 12.5% return in comparison. So pale in comparison to what the stock has done. Now let's talk about the Bank Nifty constituents as well. Even within constituents, this one really stands out. The only number 2 to this is a 41% return, which an IDFC First has given. Let's talk about why the outperformance. One, growth has remained resilient. We've seen a 6 to 7% growth on the advances front QOQ in Q4, and a near 11% growth on the deposits front, again QOQ in Q4. So despite the many challenges of microfinance, growth is one factor which continues to remain strong. Let's talk about asset quality, and in Q4 you started to see a bit of an improvement with regard to those NPA ratios. Look, I quickly mark out Q3 of FY25, where asset quality GNPA number was at 2.31%. We've seen a dip in Q4, but really the NNPA is where the game has changed. 0.91% to 0.74%. Your provisioning coverage has gone up sharply, and we'll talk a little bit about that in terms of what the commentary seems to suggest as well. So this is with regard to asset quality. Now, in terms of recovery, microfinance itself is in a good cycle, so we're seeing a bit of a recovery where microfinance is concerned. Collection efficiency has improved in Q4. March collection efficiency was at 99.2%. So you're starting to see those levers start to kick in. Provisioning coverage has gone up. You've seen unsecured MFI portfolio fully covered in terms of provisioning coverage now, and that's a positive. Credit cost guided for FY26 is 75 to 85 basis points versus the FY25 number of 1.3%. So you're seeing an improvement there, and that's a vast improvement. FY26 looks more in control, is what the bank has said. So all of that pointing towards an FY26 recovery. They're confident of a 1.8% ROA in FY26, despite the margin pressure which is anticipated to come as a result of the rate cut. Now, this is how profitability will therefore look likely. 2106 crore in FY25, but look at the jump in FY26 and look at the jump in FY27. So from 2100 crore, PAT will go to 3550 crore. This is as per consensus analyst estimates on Bloomberg. And what also led to this large re-rating is the valuation. Look at the April 2025 valuation, 2.3 times 1 year forward price to book versus the 4 times price to book 5-year average valuation. It currently trades at just 3 times price to book. Does it warrant a re-rating? Well, analysts clearly don't think so. 23 buy call, 6 hold, 5 sell, but a negative 8.5% return is what the average street analyst is penciling in. Back to you.
Okay, thanks a lot for that. Any thoughts here, Nirav, on AU Small Finance Bank? And if not AU Small Finance Bank, any of the other SFBs? Have you guys recommended these to your clients?
Well, I think with respect to AU Small Finance Bank, it's on the course towards recovery. So I think it should do well, but I think it will require a couple of quarters again for the asset, the quality to improve going forward, the margins to improve, etc. So I think we would like to wait and watch at this point of time, and we've not recommended anything as such in this space to our clients.